Greetings, guys. We're now looking at WTI oil. This particular instrument is very much similar to the Brent instrument. They move, I think, in more or less the same way. Nonetheless, let's get into the actual chart without wasting any further time. Right. So looking at the monthly chart of WTI oil, we can see that we had a very nice W structure over here, right, and a neckline at this region over here, right. Price, as you guys can see, broke the neckline to the upside, and then came back down to retest the neckline of the W structure. In fact, currently price is testing the neckline of the W structure, and what we expect to see from here is for price to continue to move up, right? And that is because that when it comes to W structures, and when price is closed above the neckline, we expect it to come back to the neckline to retest it and then push further up, meaning that we would look for selling opportunities at this point, right? So that's exactly what's happening here. We will indeed be looking for selling or rather buying opportunities at this point, and our take profit should be this level over here. Why do I say this level? That is because we have this candlestick over here. It is a liquidity candlestick, and it is carrying a whole lot of liquidity at that level, which needs to be triggered by the market, because liquidity represents money for the market, right? So let's proceed. The next thing that I'm going to do is just add the neckline for that huge W structure. Just bear with me. There goes the neckline. I'm also going to mark this candlestick over here where it ends, because it is carrying a lot of liquidity at that level, and as I said, the market needs to grab that liquidity at one point or another. So just bear with me while I mark that area as well. There we go. All right, there we go. So let me just actually fix this trend line, because actually when it comes to necklines, we just need to remember that they are not actual lines. They are areas, like I have in this particular or rather on this particular chart of WTI oil, right? So the next thing that I'm going to do is to utilize the Fibonacci retracement tool. I just want to see if the neckline aligns with any of the key numbers that we have on the tool. Let's see. There we go. Right, so we can see that actually price is currently testing the 61.0% Fibonacci retracement level, and also that our neckline is more below that 61.8% level, right? So ideally we would love to see price come to the neckline itself, right? And then from there, that's where we would look for possible buying opportunities, right? So I'm just going to delete this Fibonacci retracement tool. I didn't quite get the level that I was looking for. I was hoping that the 61.8% level or the 50% level would be in perfect alignment with the neckline. However, that is not the case. Nonetheless, let's keep moving forward. So I'm just going to head down to the weekly chart. So here we are on the weekly chart. On the weekly chart, I can see that we also have this candlestick over here. It is a liquidity candlestick, and it is also carrying a whole lot of liquidity at that level. Similarly, we also have another one at this level over here, right? It is a bullish candlestick with a small body and a long upper wick. So the scope actually for price to move above, right? And that is because, as I said, we have at this point a liquidity candlestick. At this level, we have liquidity that's trapped there, and we have liquidity at this level as well, right? So there is scope for price to keep moving up at one point or another, and I'm hoping that price would push further down to bounce at this level where we have the neckline of that huge W structure, and then from there hopefully push further up to grab the liquidity at this point, and then push further up again to grab the liquidity at this point, and again further up to grab the liquidity at that point, right? Anyway, let's proceed. Another thing that is also very much interesting is the fact that we have an overextended M structure over here with a neckline at more or less this level over here, and we can see that price actually closed below the neckline. And as you guys know by now, the anticipation is that you know, because the neckline has been broken to the bottom, we expect price to head back to the neckline to test it and then push further down, and we would look for selling opportunities on that test of that neckline, right? So I'm just going to add a neckline to that M structure. Just bear with me. There we go. There goes our neckline. And remember guys, that necklines are areas and not an actual line like we have the crosshairs. The crosshairs is an actual line, but necklines are never actual lines. They are more of an area. In fact, we can actually say that the neckline is this huge actually, if we want to, right? But we don't have to. We just need to keep it in the back of our minds that necklines are areas and not an actual line, right? There we go, right? So from here I'm just gonna head down to the the daily chart. So here we are on the daily chart. Let's see what do we see in the daily chart, right? So we spoke about this huge M structure over here and the neckline being at that level. Now that we are on the daily chart, we can clearly see that price broke the bottom side of that neckline and then went up again to retest it. So we would have looked for selling opportunities at this point, right? And our take profit should be where we have the neckline of that huge W structure that we spoke about on the monthly chart. Let me just go back there. Just bear with me. Yeah. So our take profit should be at around this level over here, which is the neckline of that huge W structure that we spoke about, right? Just gonna head back to the daily chart again. Just also bear in mind that currently where price is, right, at this level where price is, it is testing the 61.8% Fibonacci retracement level, and as much as we're expecting price to continue to keep moving further down, what may actually happen is price from where it is may actually push further up. It may bounce at this level and push further up to this level again, which is the neckline of that huge M structure that we spoke about, and it is also a very strong level of resistance. And then from here price may potentially push further down, right? Why do I say that price may retrace from this level? That is because we have that 61.8% level that we spoke about. That's the Fibonacci retracement level that we spoke about, right? So we just need to keep this in the back of our minds as we keep going forward, right? And also remember that I spoke about those levels that are carrying liquidity at somewhere at this point, and right at the top, right? So there is scope, as I said, for price to move further up. So price from where it is may actually move to this level, break this level to the upside, and then grab the liquidity at this point, push up, grab the liquidity at that point, and then push further up again to grab the liquidity at that level as well, right? So we just need to keep all of these possibilities in the back of our minds and ensure that we are, you know, up to speed with what's happening in the market. Nonetheless, let's keep moving forward. Yeah, so the next thing that I'm going to do is just add my channel. Just bear with me. So there goes my channel. Let's see. I'm just gonna fix it a bit. Let's see. There we go. Right. Just bear with me, guys. We just need to ensure that everything is as accurate as possible. There we go. right? Yeah, so I don't really see anything else of importance on this particular chart. But I also must remind you guys that this chart is very much similar to the Brent oil chart, right? They're almost identical so far. But anyway, let's proceed. Um, so from here, I'm just going to head down to the H4 chart. So here we are on the H4 chart. What do we see on the H4 chart that we should be paying attention to? Before we answer that question, I'm just going to fix my lines just to make sure that they are perfect. There we go. There we go. Right. And then I'm just going to add my H4 equidistant channel as well. Let's see. There we go. 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 Right. So what do we see on this chart that we should be paying attention to? What do we see on this chart that we should be paying attention to? One very interesting thing that I see is the fact that we have a first touch on that trend line. We had a second touch as well as a third touch on that trend line. So this was indeed confirmation in as far as selling goes, because if you go back to the daily chart, we spoke about selling at this point because price broke the neckline to the bottom side, then went up again to retest it. So we would have indeed sold at this level, and that is because we have confluence. We have number one, that huge M structure that we spoke about on the daily chart. Number two, we have the neckline of that M structure. Number three, we had price closing, closing to the bottom side of that neckline. Number four, price went up again to retest that neckline. Number five, we now have a third touch on that trend line. So there is indeed confluence, right? And it's confirmation that we should indeed have been looking for selling opportunities at this level. And if you sold at that level, I would say hold up until price reaches the neckline, which is at the bottom of the huge W structure that we spoke about, right? But also just bear in mind that price, where it is currently at this level, is testing the 61.8% Fibonacci retracement level, right? And as much as we're expecting price to keep pushing down, what may actually happen is the market may push up, right? And that is also because we had a very nice W structure over here. And what happened here is that a lot of traders and investors bought on the second leg of that W structure, and that is because we know by now that retail traders buy on that second leg of that W structure, right? And we can also see that price actually went up a bit in keeping with that W structure, but then pushed further down. So this entire move to the bottom side may be a stop hunt. It may be a stop hunt, and as much as we're expecting price to continue to move further down, price may actually start moving further up, right? Because when it comes to W structures, given that a lot of traders and investors buy on the second leg of that W structure, they also place their stop losses just below that structure. And we saw in this region, price push further up and then push further down again. It may be that this downward push to the bottom is just a stop hunt to grab all of these stop losses that are located here. And then what may happen from here is that price may continue to move further up, right? But at this point in time, in as far as I'm concerned, my bias is for price to continue to move down, right? Yeah, so that is it in as far as my analysis of WTI oil is concerned. Peace out.